Now let's take a look at some of the products and services that financial institutions offer. Financial institutions are like any other business. They provide products and or services in exchange to make a profit. Those profits are then passed along to either stockholders or members. Financial institutions offer a number of different products. Those products include things like loans, check cashing privileges, online banking services, exchanging of foreign currency, letters of credit, which are letters that guarantee payment, as well as checking and savings accounts. Checking accounts come in a lot of four different types. The first type of checking or savings account that we're going to take a look at here is called a certificate of deposit, or CD. On your slide here, these savings accounts are listed in order of liquidity, meaning how easily is it to change those into cash? How easy is it to access cash in those different products? Certificate of deposits are the least liquid or have the least amount of liquidity. Certificate of deposits are deposits or savings accounts where the depositor offers the bank, gives the bank a predetermined amount of money, and that amount of money is tied up in a savings account in that CD for a specific time. So the depositor receives a fixed rate for the money that they have stuck in that account, and it must remain in that account for a specified period of time. There is a penalty. If you do withdraw that money, there is a penalty. You can get access to it, but it's a very high penalty and really not worth taking it out early. Money market accounts are similar to certificate deposits. These are pools of money used to invest in different financial investments, whether it be the stock market or other short-term debt securities. They, again, are somewhat more easy to get your money out of than certificate deposits, but a lot of times as well with money market accounts, there's a penalty for withdrawing early. Bonds are another type of savings account. Bonds are issued by either government or corporations. They are basically IOUs in which the government or the corporation promises to pay you back your principal amount that you purchased that bond for, plus interest after a certain given a time. And then savings and checking accounts. Savings accounts are a little bit more liquid in the fact that you don't have access to the money in your savings account when you have access to the bank, usually during banking hours, or unless you have your debit credit connected to your savings account. However, in return for that, the interest rates that you receive are very low. Same thing with checking accounts. Checking accounts are the most liquid or have the most liquidity because you have access to that money 24/7. You can access your money in your checking account anytime that you want. Banks and financial services offer other special services, which include stop payment orders. So if a check that you have written has been lost and the person who was supposed to receive that check knows that check has been lost, you can stop payment on that. You can cancel that check as long as it hasn't been cashed or been cleared. Cashier's checks and certified checks are checks that guarantee payment. A cashier's check is a check from the bank. It's a bank check, which obviously guarantees that the money for the person cashing a check is going to be there. Again, the person buying a cashier's check has to give the bank money, or money has to be taken out of their account to ensure payment for that cashier's check. A certified check is basically a personal check that the bank certifies. They usually certify that either with a letter or some type of stamp on the actual check that again certifies that the funds are available or that check is authentic. Traveler's checks used to be a popular form of money used for people who are going on vacation. They are basically prepaid checks. They would function just like cash, but obviously safer because there is a trail. These things could be tracked and traced if lost or stolen. Maybe not so much traced, but could be canceled, and then new checks could be issued. And then banks now are offering peer-to-peer payment services. And you're seeing a lot of this with the online portion of banks being able to electronically send money to another person's account without actually being able to give that person cash. So these are just some of the services that financial institutions offer. There are many other services as well, counseling, other types of services that financial institutions offer as well. But these are just some of the more common services and products offered by financial services.